Hello, hello. Welcome to episode 10 of the ShopLogic podcast. We are finally in double digits. Thank you for joining me. And if it is your first time listening to the ShopLogic podcast, you might be wondering, what is ShopLogic? Well, on this podcast, I discuss all things pertaining to ethical consumerism. You might know it as mindful consumerism or conscious consumerism. It's basically your source to learn how what we buy affects you, others, animals, and the planet. So ShopLogic is something I created. It is a website, an app, the podcast you're listening to, and soon to be an ethical brand certifier. It's essentially a database to answer all of your questions about all the things we shop for. So on this podcast, you're going to learn how to buy better, read labels, and be aware of how our spending and our purchases impact our health, the environment, animals, and laborers. The goal here is learning together how to buy better. On today's episode, I will be discussing finance, tax write-offs, green banking, what are your investments supporting, charitable donations, and credit card companies. So you might be wondering, how does that pertain to ethical consumerism? Basically, anything your dollars are supporting, it's not just purchases. Ethical consumption does include how we choose to save our money, invest our money, not just the things that we buy. Being the month of April, it is tax season, and the deadline, of course, is on April 15th. Let's jump right into it and start by talking about tax write-offs. Tax write-offs can actually be a very powerful tool if you're trying to align your finances with your values, whether it's sustainability, social justice, or supporting ethical businesses. The key is understanding what the tax system already allows and where ethical consumption overlaps with deductible behavior. First, we have donations to ethical causes. This is one of the most direct ways to turn values into write-offs. Donations to registered nonprofits like environmental groups, mutual aid organizations, or human rights organizations are typically deductible if you itemize. And some examples would be climate organizations, food justice nonprofits, community bail funds, but only if they're registered charities. So just double check and make sure the organization is a qualified 501c3 under the IRS rules. The second tax write-off would be energy efficient and green home upgrades. The U.S. government actively incentivizes eco-friendly choices. You might qualify for some of these credits, not just deductions, for things like solar panels, energy efficient windows and doors, heat pumps, insulation, and EV chargers. Programs like the Residential Clean Energy Credit can cover a percentage of installation costs. Electric vehicles, EVs. Buying an EV can come with major tax credits, up to $7,500 federal credit depending on the vehicle and income limits. Used EVs may also qualify for smaller credits, and some states add extra incentives. Buying an EV for ethical reasons is great, but the tax benefit does depend on strict eligibility rules. Personally, I actually used to lease an EV. It was 100% electric and it was a Fiat 500e. This was back in 2013 and I was living in the state of California. The state was offering incentives for, I believe, $2,500 at that time. And even though I was just leasing the car, I actually received that tax credit. So these are real incentives here. Ethical spending through a business. This is where things get a bit nuanced. If you are self-employed or run a business, you can deduct ordinary and necessary business expenses that may include fair trade supplies, sustainable packaging, paying higher wages, and ethical sourcing. But you can't deduct something just because it's ethical. It has to be tied to a business activity. For instance, a cafe sourcing fair trade coffee would be deductible. But buying fair trade coffee for personal use, not deductible. That does make sense. Pertaining to transportation and lifestyle choices, some ethical habits do not get tax breaks. Biking instead of driving, there's no deduction there. Buying sustainable clothing, no. Paying more for ethically sourced groceries, sorry, not gonna work. The tax code generally doesn't reward personal consumption choices, even if they are eco-friendly. If you have a home office or do remote work, these are indirect ethics. And if your ethical lifestyle overlaps with working from home, you might get some home office deductions if you're self-employed. Lower commuting footprint means ethical benefit, but this is not directly a write-off. And what does not count? These are some common misconceptions about tax write-offs. for ethical spending. To clarify, ethical spending is not automatically tax deductible. The tax system rewards charity, business activity, policy-driven incentives such as clean energy, not everyday moral choices, unfortunately. So a strategy for ethical consumers, if you want to maximize both impact and tax efficiency, prioritize donations over consumption for tax benefits. Stack credits like energy and EVs when possible. And if you run a business, embed ethics into operations. Keep your documentation for everything. The big picture here, tax systems, especially here in the US, are structured less around personal ethics, more around economic incentives, public policy goals, measurable activities like income, donations, investments. So the smartest move is to align your ethical goals with what the system already incentivizes. Some of that info you might have already known, but I am hoping that you will learn something really interesting and useful with this particular podcast episode, because everybody is interested in finances, tax write-offs, and how to spend and invest your money as wisely as possible. And that way, it is a win-win. So not only are you spending or dealing with your finances in some way, you are also making a difference and a positive impact in the world. So let's discuss green banking for the ethical consumer. Green banking is all about aligning your money with your values, especially around environmental sustainability and climate responsibility. If you're an ethical consumer, it's one of the most powerful and often overlooked ways to make an impact, because where you keep your money influences what gets funded behind the scenes. This is probably something that a lot of ethical consumers don't think much about, or just the public in general. What does green banking actually mean? Green banks, or sustainable financial institutions, aim to avoid financing fossil fuels, deforestation, or environmentally harmful industries. They support renewable energy, clean tech, and sustainable development. They reduce their own operational footprint. They might feature aspects such as paperless banking, low carbon offices, etc. This connects closely to the broader framework of ESG investing. What is that? ESG stands for Environmental Social Governance, which evaluates companies based on ethical impact, not just the profit. When you deposit money into a traditional bank, it doesn't just sit there. It's used to fund loans and investments. Some large banks have historically financed fossil fuel projects, pipelines, or deforestation. But green banking lets you avoid indirect harm. So your savings funding oil drilling, not going to happen. Support positive change like renewables, community projects, and vote with your wallet, which is exactly what ethical consumerism is all about. Here are some specific types of green financial operations. So these banks I'm going to mention explicitly commit to environmentally and socially responsible lending. Triodos Bank funds only sustainable projects. Amalgamated Bank focuses on climate and social justice. Aspiration offers fossil fuel-free accounts. If you're into credit unions, local member-owned institutions often invest in communities instead of global industries, have lower environmental impact, and offer transparency and accountability. Green investment projects, you can choose, even with traditional banks, fossil fuel-free mutual funds, green bonds, which are used to finance climate projects, and ESG-focused portfolios. Here's what to look for, a very practical checklist when you choose a green bank. Look at their lending policies. Do they finance fossil fuels? Transparency. Do they publish impact reports? Certifications. B Corp status is a good one to look for. Carbon commitments, net zero goals, offsets, or reductions. However, you want to watch out for greenwashing. If you've listened to previous episodes of the ShopLogic podcast, I've mentioned greenwashing in the past. Greenwashing typically describes a business that gives the facade and the image that they are healthy or eco-friendly and the better choice, and that they have better moral ethics behind the business. But if it's greenwashing, that's not actually true. It's just a form of marketing psychology. So greenwashing can also apply to this topic with banks. Not all green claims are meaningful. Some institutions market sustainability while still funding harmful industries. It's actually a very major issue in finance, unfortunately. The real world impact, switching banks might seem small, but collectively it does matter because banks control trillions with a T in capital. Consumer pressure has already pushed institutions to reduce coal financing, so that's a good thing. They are listening to consumers. And ethical banking supports the transition to a low carbon economy. So if you're considering switching banks, research your current bank's investments, compare some green alternatives, and you can move your accounts gradually. So just start with your savings or a secondary account. To summarize, green banking is all about aligning your financial life with your environmental values. So it's not just where you spend, but where your money sleeps at night. Here are the best green banking options in the US as of 2026 that are selected based on real impact, like fossil fuel policies, transparency, accessibility, and features. If you are an American listening to this podcast, this very well can apply to you. Digital First is a green bank. This is one that's best for most people. GreenFi, which is actually formerly known as Aspiration, I guess they kind of go by both these days, is the best overall. They are 100% fossil fuel free, plant trees, climate impact tied to spending, cashback, savings, investing all in one app, and they're nationwide. There are no branches, but I have banked with institutions before that don't have branches, and these digital banks are actually really easy to use. GreenFi, that's GREENFI, combines ease of use and measurable climate impact. It's often ranked in the top US sustainable banking options. Atmost Financial, this is best for climate impact transparency. Again, deposits fund clean energy projects only, tracks carbon impact of your money, that's interesting, and fully digital. Amalgamated Bank, I wish they had an easier sounding name, it is very confusing when you read it, is the best traditional bank. So they are a certified B Corp. They run on 100% renewable energy, and they have strong ESG reporting and transparency. So this is best if you want like a real bank that's not digital or online only. So if you're old school, that sounds like the one for you. Beneficial State Bank, this is going to be best for social justice and environment, and they focus on underdeserved communities, strong environmental plus equity mission, and a nonprofit foundation model. So this is great if you want not just climate ethics, but also social justice. We also have some green credit unions, so these are going to be good for community impact. We have Clean Energy Credit Union. They provide loans specifically for solar panels, EVs, and green homes. And they're member-owned, so they're not profit-driven. Self-Help Credit Union. Yeah, that's actually a name. Self-Help Credit Union. They focus on low-income communities and ethical lending. So this is great if you value local impact over tech features, for instance. We also have Climate First Bank. They fund renewable energy and sustainability projects, and they're also a certified B Corp. And Sunrise Banks. They focus on financial inclusion and sustainability. City First Bank focuses on racial equity and community investment. Those are great if you want specifically mission-driven banking. So if you ask me, if you want a very simple recommendation overall, I would start with GreenFi for the digital online banker, or Amalgamated, I don't even think I'm saying that correctly, Amalgamated Bank. That's AMALGAMATED. Crazy name, because those two balance real environmental impact with usability, and that's what a lot of people are really into in the long term. Next up, I am going to discuss credit cards. Credit card companies for the ethical consumer. And comparing credit card companies, it is tricky because very few cards are truly ethical end to end. Most are going to be issued by large banks with very mixed records. So the real comparison is about how much harm they avoid versus how much positive impact they create. What does ethical mean for credit cards? Similar to banking, the evaluation usually follows that ESG Again, environmental, social, governance criteria. So we have environmental, do they fund fossil fuels, offer carbon tracking offsets? Social, do they support communities, avoid predatory lending? Governance, transparency, fair fees, responsible lending, and typical unethical activities do include funding fossil fuels, weapons, gambling, or exploiting vulnerable borrowers. Sadly, many big banks score well on ESG while still financing harmful industries, so marketing does not necessarily equate to impact. But here are some ethical credit card companies by comparison. So this is impact first, mission-driven, most ethical, like the closest you can get to pretty ethical. GreenFi pops up again. Their ethical strengths are funding tree planting and tracking environmental impact. A weakness would be not a traditional credit card. It works with the debit and linked cards. The next company credit card is One United Bank. They are Black-owned, community investment, and financial literacy focused. The weakness there is that they have limited rewards and perks, which we all typically love with credit cards. And we have the bank that has the crazy name again, amalgamated. And their strengths are they fund social justice, renewable energy, strong transparency. But the weakness with this card is that it's a smaller network and fewer perks. The next couple credit cards prioritize social impact over profit, which is actually pretty rare in finance. They try to add sustainability layers to normal credit usage. The company/card Aspiration Zero features carbon tracking, tree planting, offset rewards. But concerns would be criticism of greenwashing in some cases. The other company/card is Green America Rewards Visa. So they feature supporting eco nonprofits and ethical spending, but concerns would be they're still tied to traditional banking infrastructure. Now, the following are mainstream banks with ESG initiatives, big users that market sustainability, but they still have some controversial investments. First company is Wells Fargo. So the ethical positives would be climate initiatives, renewable energy, but ethical concerns would be a history of scandals and fossil fuel exposure. And the other company, Citi. The positives here, environmental finance programs and sustainability goals, but the ethical concerns, large fossil fuel financing footprint. It's a bit of a conundrum when it comes to credit cards because there's no great answer. A lot of people want those perks, the rewards, the points, the cash back. Some ethical consumers often do this instead. They use credit unions or ethical banks and debit cards, or they keep one credit card only for essentials, or they choose cards based on issuer ethics, not the rewards. Bottom line, there is no perfectly ethical credit card. The best options, most ethical, like mission-driven banks, would be One United and amalgamated. Middle ground would be Aspiration and Green America, and the least ethical, the major banks. But obviously, those are the ones that are the most convenient. The next topic I'm going to discuss would be investments. Ethical investing, often called socially responsible investing or SRI, a lot of acronyms on today's episode, is about growing your money while aligning it with your values, whether it's environmental protection, fair labor practices, or avoiding harmful industries. Here is a breakdown of how it works and what your options are. Core approaches to ethical investing, ESG investing, bonus points if you remember what ESG stands for. Focus on companies scored on environmental, social, governance. Many funds track ESG ratings to select better companies rather than avoiding entire industries. Negative screening. So in other words, what to avoid. You should exclude industries you do not wish to support, like fossil fuels, perhaps tobacco, things like weapons, and possibly gambling. Avoid companies like ExxonMobil or Philip Morris International. Then we have positive impact investing. You can actively invest in companies or projects making a measurable positive impact pertaining to renewable energy, clean water, affordable housing. There are companies like one called Next Era Energy included in a sustainability-focused portfolio. Common investment options might include things like ethical ETFs and mutual funds. These are the easiest entry points: ESG-focused index funds, fossil fuel-free funds, faith-based or values-based funds. And some examples would be from companies like Vanguard, which you probably have heard of, or BlackRock. Both offer ESG products. Individual stocks, this is another option. You can handpick companies aligned with your values, like clean energy firms, certified B corporations, and companies with strong ethical track records. We also have the option of green bonds. These are loans that fund environmentally friendly projects like solar farms or public transit. Another option is community investing. You can put money into credit unions, local development funds, minority-owned businesses. That's going to have a direct, visible social impact. Here are some pros and trade-offs. Benefits would include aligning your money with your values, supporting positive change, increasing evidence that ESG funds can perform competitively. But the challenges: greenwashing, companies exaggerating sustainability claims, ESG ratings can be inconsistent, and sometimes there are fewer diversification options. Get started by defining your values, decide what matters most to you: climate, human rights, that sort of thing. Choose a strategy, research funds carefully, and use platforms and tools. There are so many investing apps now that offer ESG filters and ratings. But the reality is that ethical investing is not perfect. No company is 100% pure or green, and even ESG funds may include controversial firms. Impact will vary depending on the investment strategy. Just think of it as better alignment and not perfection. Some of the top best ethical funds that are simple diversified picks, these are easy options for most people. I'm just going to rattle them off quickly, and features might include things like excluding fossil fuels, weapons, tobacco, diversification, etc. iShares ESG Aware MSCI USA ETF, in parentheses ESGU. Vanguard ESG US Stock ETF, in parentheses ESGF. iShares ESG Aware MSCI EAFE ETF, in parentheses ESGD. iShares Global Clean Energy ETF, in parentheses ICLN. Xtrackers MSCI USA Climate Action ETF, in parentheses USCA. TCW Transform 500 ETF, in parentheses VOTE. Fidelity Sustainable Core Plus Bond ETF, in parentheses FSBD. I told you there are definitely going to be a lot of acronyms in today's episode. I recommend doing your own research. What do you really want to invest in? Decide what matters most to you. And last but not least, I'm going to discuss charitable donations. This is one of my favorites. I love donating for Christmas presents, birthday presents. That's what I ask for a lot of times. It is a great gift to receive, but also if you just feel like donating to help out, it is a great feeling. And if you want your donations to reflect your ethical consumer values, like helping animals, people, the planet, here are some highly respected organizations across those areas. If you're into animals, like I am, welfare, rights, and conservation, donate to the Humane Society of the United States. They work on animal rescue, anti-cruelty laws, and factory farming reform. The World Animal Protection. They focus on ending animal exploitation globally, wildlife tourism, farming, and disaster rescue. Best Friends Animal Society. They aim to end the killing of pets in shelters across the U.S. Sea Shepherd Conservation Society. They protect marine wildlife from illegal fishing and environmental destruction. If you are really interested in the environment, like climate, conservation, sustainability, here are some places to donate to. Rainforest Trust, which protects endangered ecosystems by funding land purchases and conservation. 350.org mobilizes global grassroots movements to fight climate change. The Environmental Defense Fund works with science and policy to tackle climate, oceans, and ecosystems. And the Nature Conservatory, one of the largest groups protecting land and water worldwide. If you're thinking people, like human rights, poverty, and global health, here are some places to donate to. Give Directly sends money directly to people in poverty. They have a high transparency and a strong evidence base. The Against Malaria Foundation, they distribute mosquito nets to prevent malaria, which is widely rated as highly cost-effective. Doctors Without Borders provide medical emergency care in crisis zones worldwide. Oxfam International works on inequality, disaster relief, and economic justice. And here are some high-impact, effective altruism style picks. If you want maximum measurable impact per dollar, we have GiveWell for top evidence-based charities, mostly in global health and poverty. Animal Charity Evaluators identifies the most effective animal welfare organizations. Here are some tips for ethical donating. Look for transparency like impact metrics and independent ratings. Check overhead versus impact. Lower admin cost isn't everything. Results matter more. Consider local giving. Food banks, shelters, mutual aid in your community can have immediate impact. Monthly donations are actually better than a one-time donation because it helps organizations plan for their long-term goals. Be sure, of course, to align with your values like vegan advocacy, climate justice, and labor rights. That was a lot of talk about money, finance, taxes, investments, donations. I hope you learned something today. I know I definitely learn all kinds of stuff when I look up different topics and gather information. So for me, this is also very enlightening info, and I pick and choose what to share with you on the ShopLogic podcast because I believe it's relevant to our goals as ethical consumers, trying to do our best to support animals, people, and the planet. And that was today's episode 10. Be sure to check out the ShopLogic website, the ShopLogic app, which is free. Just Google it and download it. And follow on socials like Instagram, Facebook, YouTube, and of course, subscribe to the Spotify podcast for weekly episodes to learn how we can buy better. I'm your host, Adrienne, with ShopLogic. Thanks for listening. Bye.